Hello and welcome to the Motilal Oswal studio. You're watching Buy Now, Sell Now on ET Now with me, Shreyansi Singh and Cheryl D'Souza. And this is the show where we get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But first things first, let's take a look at the market first, and it's quite the flip-flop coming in because you do have some strength being displayed by a couple of sectors, but barring that, a tinge of red.
Yes, absolutely, Shreyansi. But very good morning to you. But it's always good to see green on the screen. Wow, it's rhyming. It's good to see green on the screen. You're also wearing green, and hopefully the markets will end in the green. That's what we're hoping. We'll ask that question to Kunal in a short while from now. But let's take a look at the market. Steady recovery underway. When you talk about the benchmark indices, almost 120 points uptick coming for Nifty from the day's lowest point. You have Bank that has been leading from the front since the word go. The advanced decline ratio also has seen a good improvement on an intraday basis. IT index, that one has also seen a very good recovery from the day's lowest point. Let's take a look at some of the counters that have actually shown some strength over the last 15 odd minutes or 20 odd minutes. You have IT sector, like I said, 1.5% uptick from the day's lowest point. You have Tech Mahindra, HCL Tech displaying some sort of a recovery from the day's lowest point. Talking about the list of gainers then at this point in time, you have SBI that is leading from the front, 3% uptick coming in for SBI. You have a City note that is coming on SBI, and that's actually also having a positive rub-off effect on the stock. BEL, Trent, BPCL, Tata Steel are the other set of counters that are gaining in trade today. While on the flip side and the losing end of the market is Bajaj Auto, top loser on the Nifty, 3% downtick coming in for that one. We did speak exclusively with the management of Bajaj Auto to understand what exactly is happening when you talk about the sales, the way how the road ahead is when you talk about the tariffs and the global scenario. So do catch that exclusive interview that we've had with the management. Apart from that, Nestle, Bajaj Finserv, HCL Tech, Infosys are the other set of losers in trade today. Talking about the sectoral print, while yes, it is not looking bad today, given the fact that you have a couple of sectors holding on to strong gains. PSU Bank Index is the top sectoral gainer. You have the broader markets that are seeing very good strength, 1% uptick coming in for small cap. Metal also holding on to good strength. Realty Index also in the positive territory. While on the flip side, it is FMCG, IT, Auto that are losing in trade, as well as Pharma stock or Pharma Index also that is in the negative territory. So that's the way how the markets are looking like at this point in time, Shreyansi. And like I said, green on the screen is always a good news. And we have Kunal also joining us on the show. Let me ask Kunal, good news is it? Looking at the screen right now. And also we have Rajesh Agarwal also on the show. We'll ask Rajesh what he's betting on. But Kunal, what's your view?
Very good morning to everyone. And yeah, I think it's good to see finally some green on the screen. But I think there are two important parts which are the hallmark so far, for today's day and so far over the last 1.5 to 2 hours since the market opened. One is of course the strong fight back from bulls right from the open, because we were at a point where the GIFT Nifty was showing almost like a 150 to 200 points downtick. So the expectation or anticipation was that the markets would trade reasonably below the 22,000 mark. But then there's been a very strong comeback right from the word go. I think in just the first 5-7 minutes of the market open, there was a very strong fight back in terms of stocks sectors which start to show signs of recovery. I think that's trickled into the confidence, breeding into mid caps and small caps and many large cap names which are still looking attractive, and they are making a comeback for themselves. The second and the most important part, yesterday when the US markets fell, the CBOE VIX over there managed to rise up almost 15 to 16% on just a single trading session. So far, even at the start, the India VIX for us did not cross about that 15 to 15.5 odd mark. And that I believe is a very strong indication that the markets are just about trying to settle into this pivot range of 22,000 mark, which means I think we could be at a point where over the next 2 to 3 days, we might see the index just about stabilizing at the 22,000 mark. Even if that happens, I would still consider that as an extremely positive sign for the index over the very near term.
Well, absolutely. So that's Kunal's take coming in. A very good morning to you, Kunal, as well as Rajesh. Rajesh, I wanted to come to you. What do you think about the green on the screen? Is this a trend that you see sustaining for a select few sectors? What do you see emerging next when it comes to the markets?
Good morning, Cheryl. Good morning, Kunal. We believe that after the kind of massacre, I would say, witnessed in the market in the last 5 months, where we have seen frontline indices going down by almost by 15-18%, and in the mid caps space we have seen stocks correcting by more than 50%. It's time to go ahead and start accumulating stocks. But one thing is for sure, one should be there for a longer period of time, maybe 6 to 9 months time horizon would be the minimum side. And one should look at quality first, because one never know when the market will turn around. Yes, technically, I think it's an oversold zone. It will go for a bounce back. That Kunal would be a better person to explain. But fundamentally, I think there is nothing wrong with our company, our economy as such. Everything is going well. Even in the weekend, the chief economic advisor had very clearly mentioned that we are going into a 4 trillion economy in FY25 only, and that was a very positive sentiment as far as I feel. RBI has taken its own steps, cutting interest rate, and they might go again for future cuts. So everything is in place. The only problem which we face every day is in the morning we come and see Trump has said this, Trump has said that, and stock markets start falling without any reason. So there are fundamentally strong companies which can give good return. We have to focus on that. And the most important thing in market is sometimes not to do anything, just buy your stocks and be patient and carry for long term. If somebody looks everyday prices, and then there is definitely going to be panic. So it's better to select good stocks, be in a long term, be for a long term. There are many pockets where the fundamentals are strong. I think infrastructure can be a good play. Private sector banks are looking very good. For example, HDFC Bank, ICICI Bank, XCX Bank, they are good bets, I would say. Even railway space, where we have seen yesterday IRCTC being moved to Navratna space, the valuation at around 600 plus odd rupees. It's damn cheap, I would say, the kind of monopoly it has in its business. So there are very good companies available at very good valuations where one can have a look.
It's time for a very quick breather on the show. On the other side, of course, we'll be kick-starting the show, taking all of your stock-related queries, so keep writing to us. Welcome back. Thank you so much for staying tuned in. Well, first things first, let's kickstart the show and start taking all of your stock-related queries. Before we do that, on your screens, you can see the number that you can write to us at. Do remember to mention the buy price for the stocks that you hope to be, that you're already invested in. In fact, and the ones that you hope to be investing in. Do remember to mention the time horizon that you then have in mind. But with that, let's kickstart taking all of your stock-related queries. Kunal, the first one that we have is coming in from Nikhil Sharma, who's writing to us from Mumbai. He's 23 years old, has mentioned that he's both a short and long-term trader. Wants to know about Tata Motors 20 shares that he's holding on to. 716 rupees is the buy price, and he's saying that he wants to know if he should book losses according to you at this point.
Well, I think it's not a bad price which you've bought, because 700 plus levels is a very recent price for Tata Motors, and my assumption is that you've bought it in this leg of the market correction and not maybe a couple of years back when the stock was moving up from 700 to 1000 plus levels. Now, if that's the case, then I would believe that you can continue to hold on to the stock. I would also believe that in case if the stock happens to fall, say, marginally below the 600 mark, say closer to 585 or levels, that could be another zone where you may look to average out further, because my sense is that the stock should grind for some more time over here. The pace of sell-off is getting arrested for Tata Motors. What we are also seeing is that the stock has come back towards a long-term moving average support, specifically on the weekly charts, just around that 600 levels. So which means that the stock should just about try to stay in a volatile band with a pivot around the 600 levels. So the closer you are towards the cost price, or you can lower your cost price for the stock, if you try and take advantage of corrections, that would be a very good strategy for Tata Motors. And in case whenever the stock bounces back and say comes back to a level of 700 to 750 odd mark, that could be a point where you may consider to book profits.
All right, this one is coming in from Sandeep. He's writing to us from Noida, and Rajesh, I'll come to you. He wants to know about Praj Industries. He already has about 100 shares of Praj at a price of 374 rupees per share. Wants to know what's the long-term view on this one and what should he do?
See, Praj as a company is good, but at this point of time, when crude is trading at around $71 odd, I don't think these kind of companies, which are basically into ethanol, which is a substitute for petrol and all, are going to do anything in the near term. As far as long term is concerned, one can continue to hold. Company is very good, fundamentals are strong, but short term, we don't find any reason to believe that it's going to give a bounce back.
That's a take coming in as far as Praj Industries then is concerned. The next one that we actually have is coming in from Parag Kunal, because he's writing to us about 25 shares of Hindustan Aeronautics that he has. He's bought them at a buy price of 4,376 rupees. He wants to know what your outlook is and what kind of levels are you looking at when it comes to this one.
See, over the last couple of days, there are some signs which are emerging that this 3,000, 3,200 level is emerging as a strong support, at least on the short-term charts for Hindustan Aeronautics. And we've also seen that it's Simichet Pure, Bharat Electronics. That stock is also mirroring a very similar kind of a chart performance, and you've seen the stock stabilizing a bit more. So, which means that we are looking at a point where many of these so-called defense names, they could actually come back into maybe a good value buy or a contra buy territory. So I think if you've bought at higher levels, I would suggest to just hold on to the stock as of now, and potentially I think in the next 1 week there could be better signs emerging that these stocks would probably have formed a formidable short-term bottom, and then from there averaging out could probably make a good sense, at least on the short-term part.
Kunal, let me come right back to you once again, because we have this query from Shaurya. He's writing to us from Gurgaon and he wants to know about Adani Energy. For the next 6 months, is it the right time to go ahead and buy this stock post-correction?
See, I would avoid, in fact, I would suggest that you should avoid the stock, frankly, because the stock has not just corrected by 20-30% like a normal, mid cap or a small cap, kind of a name, but you've seen the correction being extremely sharp for Adani Energy Solutions. In fact, the stock made a high of 4,000 and it's now almost at 650, 655 kind of a mark. So, which means it's a correction of more than 70% into the stock price, and that's a steep correction for stocks. And these are the kind of stocks which may look attractive in terms of price, but I would probably believe that these stocks, they take quite a long time to try and make a solid comeback. So trading opportunity wise, yes, you might get those trading pops, 10-15% kind of a rally, but I strongly believe that such kind of names, they generally tend to underperform on the more longer term basis.
Alright, then that's the take coming in as far as Adani Energy is concerned. The next one, in fact, Rajesh, that we have is coming in from RK Ahuja, and he's a long-term investor. Now, he's asking about a few stocks. We've already addressed HAL, PFC, REC, Varun Beverages. What do you think about all three of these counters? Because he wants to be investing a lump sum in these for the long term. What do you think?
Very good companies, I would say. In fact, PFC and REC is a very good dividend play. So even one can think that they have put their money in the bank and getting interest out of that. So it's equal to that. PFC, REC trading at a good valuation around 7-8p, doing very well. The power sector demand is going up. So obviously REC, PAC, which are basically financing companies, the power sector are going to do well. Asset quality has improved and IMs have improved. And not to forget the kind of dividend which I have mentioned. So both are PFC, REC, both are a very good buy for a long-term horizon, and the valuations are also good after the kind of correction which these stocks have witnessed. Even in case of HL, there have been concerns about the execution part, but for long-term horizon, the kind of focus of the government on indigenization of defense and all, I think that stock is also good.
All right, so that's the take coming in on some of those counters. Let me take this next query then, and this one is coming in from, I don't have the name of the viewer, but wants to know about hospital shares. Is it the right time to go ahead and buy hospital stocks, Max Health, Fortis Healthcare, or any of these counters for a period of about 2 years or 2 years and plus? What's your take, Rajesh? Do you think is the right time to look at these hospital names apart from the ones that were mentioned?
I think if you are an investor for a long term, when you're talking of 2 years, 3 years, obviously it's a long term. Any time is a good time to buy, provided it's a good company, good fundamentals, good corporate governance, and all those things. You can never time the market, so there may be 5-10% downside after the you buy, but for a long term, doesn't matter, I would say. As far as healthcare is concerned, the prospects are very good. After COVID and all, people have moved their focus on Mediclaim and all, and that's a very positive thing for organized players. Secondly, in budget also, FM said that they are going to focus on medical tourism. That's also a positive for this entire sector. So all in all, the hospital as a sector is doing very well. And if I have to give some picks, the first one obviously would be the largest one, Apollo Hospital, with almost 10,000 beds, doing very well. And in the second rank, we have picks like Narayan Hridayalaya or Shalby Hospital. Even Max is also doing very well. So these are some of the names which one can have a look on.
That's the take coming in as far as some of those hospital counters then are concerned. Tell you what, Kunal, I'll come to you with the next one because we have Anand who's writing to us from Bengaluru. First of all, he's mentioned that he's a big fan of the both of you. So compliments coming in there from Anand, but he wants to know, Kunal, about some strong fundamental stocks that you have in mind when it comes to the ultra long term. Firstly, how do you define that time period as well? And are there any stocks that you have in mind?
Thank you so much for that, first of all. But I think Rajesh would be a better person asking about fundamentally strong stocks. If you ask me technically, then yes, I could probably answer. But then fundamentally, I think Rajesh is best suited.
Well, absolutely, Rajesh. I'll take that question across to you. He did give compliments to the both of you, so I confused it and went to Kunal. But Rajesh, what's your take here?
See, if you're looking at large cap after this kind of correction, almost a lot of stocks are available. If you're looking at large cap with a stable return of 14-15% annual in the next 4-5 years, I think Reliance, HDFC Bank, ITC, Larsen, these are some of the good names. In mid-cap space, there are a lot of stocks like IRCTC, Tata Power, you have Geo Financial, so you can have a Blue Jet Pharma. So these are some of the companies which we have been recommending to our clients for at least for a minimum time horizon of 18 to 24 months.
All right, that's the take coming in on some of those counters that one can watch out for. Kunal, let me come next to you and let me take this query that I have. It's coming in from, this one is coming in from Tony Pereira. He wants to know about India Cements. He's keen to actually sell it, but he doesn't know about when should he go ahead and sell India Cements. He wants to know that his entire query is very puzzling. The fact is that he wants to go ahead and sell India Cements. The fact that this entire Ultratech buyout also has happened. So he is basically thinking whether he should go ahead and do it or no. What's your take coming in, especially on the charts? How is India Cements looking? And then I will come to Rajesh to understand the entire dynamics, given the fact that now Ultratech is here, who is actually taking over India Cements, and what does that mean for India Cements and the company as a whole. But Kunal, first to you.
See, I have always, and I've tracked India Cements for the last, I think, a decade or so. And especially, I think I remember a point when the stock was at 60s and 70s. From there, I've been tracking the stock very, very closely. Now, when you look at the longer term trends, and I've seen the phases when the stock has underperformed grossly, most of the other cement counters for months and quarters and even years on a trot. And only in the phase when the news flow was surrounding India Cement, there was a point when the stock moved up, I think, from 200 to 350 plus kind of a mark, but then the momentum fizzled out and we saw the stock coming back into a corrective phase. Now, when you see such kind of stocks, the only question is that whether these stocks, which are event-driven stocks, whether they show any kind of a major merit in terms of holding from your longer term portfolio structure. I would actually recommend that if you're looking at building up long-term, kind of a stance in the cement names, I would actually look at, the larger cap heavy-weighted stocks, the likes of Ultratech Cement. You may also look at Shree Cement. That's a stock which I believe is evolving pretty well for itself on the longer-term basis.
Alright, then that's a take coming in as far as some of those cement counters are concerned.
Right. And Rajesh, what's your view actually, especially on this, given the fact that India Cements, now Ultratech is taken over it. Does that change the fundamentals of the company and now one can actually stay put with it if they already own the stock?
I think yes, one can continue to hold. The offer was oversubscribed, I would say, almost 81.9% is with Ultratech now. So it's a very small part which is floating in the market. And I won't be surprised in future again they come out with further offer to take away that. The offer was done at almost 390 odd rupees and now it's trading at around 375, 275 to 80. So there is a substantial gap from the open offer price to the current market price. And now with Ultratech on the helm, I think things would be better. One should continue to hold. And for by any chance it falls to around 250 to 40 odd levels, one can even add.
Take coming in as far as some of the cement counters are concerned, both on a technical as well as a fundamental basis. Tell you what, we'll slip into a short break and when we come back, we'll continue taking all of your queries.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Let's continue taking all the queries that have been pouring in, coming in from our from our viewers. And also viewers, if you have missed the number, then the number is flashing on the top of your screen where you can write to us. We have two of the most favorite experts today on the show, Kunal Bothra as well as Rajesh Agarwal. Given the fact that people love to see their camaraderie on screen, the fact that now all of a sudden they have a lot of stocks where they have a consensus buy call, case in point being ITC. You know, Rajesh, the other day when we were talking to Kunal, and one surprising stock that I actually saw in his list was UPL. And I was hoping to see you on the show along with him, because UPL, he's saying that it's reached the ITC stage right now where he thinks that it's the time for give a thumping buy call on this one. What's your take? Are you also in the same bandwagon as Kunal once again?
See, long term, yes. The company has a good portfolio of products, not only in India, but they have internationally done very well. They have acquired some company. The only problem with this company is huge debt, which due to that, the bottom line numbers are not that good. Once the debt is taken care of, I think things will start improving. They are into agrochemicals, and the government's focus on agri and all rural economy is going to be positive for this company. And the valuation have become attractive, I would say. At one point of time, when it was trading at around 900 odd rupees, that time things were a little stretched. But at this point of time, I think valuations are also favorable. Somebody having a time horizon of 12 to 18 months can go long on this.
So outlook as far as UPL is concerned, so looks like you're extending your camaraderie to your recommendations as well. But the next one that we actually have, Kunal, is coming in from Pratiksha, who's in fact writing to us from Oman. Wants to know about NATCO Pharma at this point. What do you think about this one? Because she's sitting at losses right now, wants to know if she should average.
No, I would not recommend to average the stock at current levels. And I understand that the stock has gone through a very sharp sell-off in the last 1 month itself, from 1350 levels thereabouts towards 810. Now, these are the kind of stocks which, after such kind of a sharp gap down and then a consistent selling in a short span of time, they tend to underperform. So there comes a phase where these stocks continue to drag, and there's a sell on rallies kind of a mode or strategy into these names. But I would believe that rather than building up to the stock and adding or averaging out at lower levels, expecting that the stock would come back into the bounce back mode and come back to your cost price, I would actually believe that you should use any kind of a bounce back, like a 5 to 10% kind of a swing high from the swing lows for the stock prices, as a case where you should look to offload or maybe reduce your quantity or holding into the stock. So I would actually suggest that rather than buying on dips, a sell on rallies could be a better strategy for the stock, at least over the near to medium term.
All right, let me come to you, Kunal, once again. Okay, let me actually take this query to Rajesh on Asian Paints. We have a long-term investor, that is Pankaj Kumar Nanda, who's writing to us from Assam. And he has 12 shares of Asian Paints at a price of 2,412 rupees per share. He wants to know whether he should hold on to it, exit. What's your take coming in on Asian Paints in particular, given the fact that this one has seen the big hit of competition, a stock that actually is not done much?
You said it right. The stock has not done much, and I don't believe that it's going to do anything in the next near future. Because of various reasons, as you mentioned, competition is heating up with Grasim, Astral, or moving in, JSW all coming into paint. The competition is going to go up. Despite being the market leader, yes, it's going to feel the hit. The margins are down, and we have seen crude prices also very soft in the last 2-3 quarters, and despite that, the numbers that Asian Paint posted last quarter was below expectations, I would say. The market is bad. Once market improves, there would be a bounce back to around 2,300 odd rupees, 2,350. At that time, I would say exit. At this point of time, one can continue to hold.
Then the next one that we actually have is coming in on trend. Dr. Ravi is writing to us from Bengaluru. Kunal wants to know if it's a good time to buy. In fact, I'm going to go ahead and get greedy with this, get both of your takes coming in as far as trend is concerned. Kunal, you go first.
Well, short term wise, yes, because I was actually looking at the charts a couple of days back when the stock had hit 4,800 mark or sub the 4,800 levels, and there was a point where the indicators had started to become oversold, the volumes had moved up higher. That generally becomes a classical point when the stock sees a short term turnaround. Now it's moved up from 4,800 levels or sub 4,800 mark to now 5,000, 5,100 mark. My sense is that the stock should move up towards at least 5,200 mark to 5,300 zone over the very near term. So I would actually expect that maybe 50% of the bounce for trend could have played out, and you may expect another 150 to 200 points on the upside with the very short term.
Alright then, Rajesh, I wanted to know what is your take when it comes to trend. Are you extending your camaraderie? Do you concur with what Kunal just said?
See, the company has been doing well, not only value segment, but also they are going to other segments also. The numbers have been good. But the problem is the valuations are very stretched. So if somebody is looking for a bounce in short term, that would be purely a technical bounce where you can see some trading profits. But for investment, I would say wait for some more time to accumulate.
All right, so that's the take coming in on trend. Wait for some more time before you look to accumulate this particular counter. Let me take this next query then, and this query is coming in from this one is coming in from Ignatius. He's writing to us from Kolkata. He has 70 shares of AB Capital at a price closer to about 212 rupees per share. He's held on to this for the last 1 year. He can hold on to it for the next 2 years as well, Kunal. But is this the time to average it out?
Well, not a time to average it out because the stock, even though the financial services space as such has started to look attractive, but AB Capital is not something which has been a relatively strong stock, especially in the last 3 months of the sell-off. The stock has corrected from 240 levels, towards a recent low, I think around the 150 mark. So the sell-off has been quite aggressive into the stock price. We ideally wait for a point when the stock shows the first confirmation of a breakout of its previous swing highs. That high or that level for AB Capital is around the 173 mark. So I would actually suggest that just wait out for some more time. Let the stock show signs of strength. Let it come back about that 170 plus levels. And once that happens, that I believe could be an indication that a near to medium term bottom is in place, and you might see the stock coming back to that zone of 200 to 220 also over the medium term.
Alright then, Rajesh, the next one that we have is coming in from Sanjay, writing to us about IRFC. He has a 3-year time horizon in mind. He wants to know if it's the right time to buy when it comes to this counter.
See, the stock has seen massive correction, doing very well. They are into financing railway projects. Asset quality is good. But still at this point of time, somehow I feel the valuation is still stretched even after this kind of correction. Maybe 90, 85, 90 odd rupees would be a better levels to enter.
All right, so that's the take coming in on IRFC. Let me take this next query that I have is coming in from Dinesh. He's writing to us from Noida, and he's a senior citizen. He's a big fan of you both, Kunal as well as Rajesh. He has about 100 shares of Hero Moto at an average price of 4,700 rupees per share. He wants to know whether he should buy more to bring down his average price, and if yes, at what price should he go ahead and buy? He's a long-term investor is what he's saying. Kunal, what's your take?
Thank you so much for that. First of all, see, for Hero MotoCorp, the only interesting part when I look at the charts is that the stock is at a 30% divergence from its 200-day moving average. So, for example, the 200 DMA is at 5,000 and the stock is at 3,500 levels, which means a divergence of almost 1,500 points. That's almost 30% for the stock. Now, these are steep divergences. Add to the fact that I think, if I'm not wrong, it's almost like the 7th or the 8th month where you've seen the stock, selling off very aggressively, and I think from 6,000 levels the stock has almost half towards 3,000, 3,500 mark where it's trading right now. So on both parameters the stock seems to be into an oversold category. But you have to remember that when stocks come back into these kind of oversold territories, the price may look attractive, but these stocks may take some bit of more time to try and channel a strong uptrend for themselves. So if you're a patient investor, I would believe that nibbling at current levels for Hero MotoCorp could actually turn out to be a very good strategy over the medium to long term.
All right, so that's the take coming in on Hero MotoCorp. Let's actually mark the news that we just got a short while ago, where you have the Bombay High Court that stayed the order to register the FIR against the former SEBI chief as well as others in the case. Remember, you had SEBI and BSE move a High Court against a special court in the CALS refinery case. This case actually dates back to about 1994 or so. So on back of that, or rather it's the 1994 listing. So on back of that, you have now the Bombay High Court who's gone ahead and stayed the order, and the next hearing will be after 4 weeks is what we are picking up right now. I will hopefully we'll be able to connect with our reporter in a short while to exactly understand what this case is, what does it mean, and what did the Bombay High Court actually had to say in its order that is passed in this case. So we will get to you more details on that, but for now we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we will continue taking your queries, so don't go anywhere. We are actually running out of time on this edition of Buy Now Sell Now. Thank you so much, Kunal, as well as Rajesh. But before I wind down this edition of the show, let's take a quick look at the markets, because we have seen a good recovery from the day's lowest point when you talk about the benchmark indices as well as Nifty Bank. IT index also has seen a good set of recovery over the last few hours or so. Let's take a look at the advanced decline ratio and what sort of a print are we seeing when you talk about the advanced decline ratio. It's worsened a tad bit from the start of the show, but nevertheless you have more gainers on the screen than the losing end, as well as if you look at Nifty Bank in particular. Actually, let's take a look at Nifty Bank. That's actually come off the day's highest point. Remember, the Nifty Bank was outperforming the benchmarks from the word go. Right now, a tad bit of underperformance. But on that note, we're totally out of time on this edition of Buy Now Sell Now. I'm done with my Shankar Mahadevan act, but thank you so much, viewers, for joining in. It's a goodbye from Shreyansi, myself, and the team that put the show together.
If you like this video, then like, share and subscribe to ET Now.